nice to see everyone here this morning. My name is Matt Cashman. I am the Principal of Investor Education at OCC. I was an options trader for, well, I guess I technically still am an options trader. I was an options trader for 25 years, and now my work really focuses on using all of that kind of experience to teach people how options work. So that's much of what I do. I'm going to allow each one of you guys to introduce yourselves. Just to set table stakes a little bit, we're going to be talking about tools, AI, and automation, how all of those things are starting to make their way into some real-world applications that all three of these gentlemen work in businesses that do that. So, Rob.
So three core areas for us. We have WealthCharts, which is a financial trading application. We have Wealth 365 Summits, which is where we bring in tens of thousands of people together, which Matt knows well. They are routine sponsors on that. An incredible large event. And then we have our Wealth Lead Network. So we have three different core things in our portfolio that all equal our ecosystem. So looking forward to bringing some of that knowledge to today's meeting.
My name is James Putra. I'm SVP of Product Strategy for TradeStation, and what that means in a nutshell is I get to think about and play with tools and technology that are 3 to 5 years out. And some of the things I might say on stage will definitely sound crazy today. Don't worry, I am a little bit nuts, but it is a fun job to have. And TradeStation is an online retail broker-dealer. We tend to service active traders, and we are someone that likes to push the envelope with the types of tools and capabilities that the customers can have.
And my name is Chris Josephs. I'm one of the co-founders of Autopilot. We are best known for the Pelosi tracker. So if any of you guys are on social media, we built the first way to take your stock portfolio and trade alongside politicians. So that's kind of like our little claim to fame. And I'm the one that runs that Twitter account. But also on the Autopilot side, we built the first marketplace of stock pickers, where the majority of Americans out there don't necessarily want to pick stocks on their own. If there was only kind of a place that you can go and trade alongside professional stock pickers, that's kind of what we're building. It just so happens Nancy Pelosi was the first one we did, and she did pretty well. But now we're opening up to allow more and more people to launch their own funds over time.
Yeah, your name came into my mind a couple of days ago when I saw that she wasn't running again, and we talked about it backstage, whether or not you were sad about it. Obviously, Nancy Pelosi has been a big part of it.
Yeah, it's a little bittersweet. It's like you've been running that thing for 3 years. I'm an absolute nerd now on political stock trading, which is, when I started, I didn't even know they were allowed to trade. I think like how a lot of people thought about it, but it's good to see that page turning. Hopefully a ban still does happen, but we'll see.
Yeah, I want to start, I think, not much of this discussion, but I do want to start talking about, and Chris, I think this leads directly into what you guys do. As far as, you know, do you take issue with it being called a follow bot in a way? Is that a horrible term to use as far as what this thing is doing, or no?
Yeah.
Okay.
I think our team wouldn't necessarily call it a follow bot. And I think like over where the entire industry is going, though, kind of with eToro now being allowed to do this, which is great. Robinhood is starting to launch some sort of social features. We've been doing this for 2 or 3 years. We see it more as like the same way rich people have access to hedge funds. Yeah. We now are creating access to high quality investors that you can just trade alongside. So follow bot, copy trade, we don't think that's necessarily the right term, as opposed to like long-term investing with professional investors that have a proven track record that know what they're doing. And you can just put your money with them, dollar cost average in, recurring investments, et cetera, and let them kind of just do it for you the same way hedge funds do it for the uber wealthy people.
Yeah, it is an interesting point, right? That, people talk about it all the time about the technological piece of it really allowing people to do that. And that has always existed for people who have the means to actually do it, but that now it's kind of democratized in a way that it's just available in that way. I think one of the things, and you and I have talked about this, and I think we should all kind of weigh in on this, is how we think about risk as far as those situations are concerned. Like James also in that situation, from a brokerage perspective, right? This is something that you guys have to think about also. Where are those trades coming from? What are they, if they're recommended from somewhere, where are they actually being recommended from? Like where does the governance piece of this lay?
So I think probably you're getting at more of a potential for market manipulation from, let's say, Pelosi getting ahead of the trades.
Sure.
I think it's really hard to do these days. So as a broker dealer, we're heavily licensed, regulated, and very responsible for what order flow flows through our company. We have so many systems in place, and they're interconnected with the regulators as well as other broker dealers. It's really hard to manipulate the stock right now. You're more likely to get an account takeover that gets a manipulation than somebody getting in and influencing what the follow bots are doing.
Yeah. And how does that, Rob, from your perspective, when we're talking about much of what we've talked about when we're talking about wealth charts is about visualizing how how your traders and the tools that you're giving them are able to visualize what they're doing, how the data is presented. How does that work as far as situations like that are concerned? And what are some of the things that you guys are doing that are allowing people to visualize those things more?
Well, there's the visualization side and the behavioral side of the intelligence as well, right? So on the visualization, everybody's inundated these days with quotes, APIs. We have wonderful API integration opportunities. There's so many people. I'm just curious, how many of you are part of an API group today? You guys, so I see, look at all those hands, right? So, so the visualization side of it is taking all that data and then, making something out of it that's actually understandable. It helps you understand where market strength is, market opportunities are, things of that nature. So there's the visualization piece, and then there's the business intelligence side of that whole piece, the behavioral intelligence side. Like, what do you do with that? Because the best traders are going to focus on also themselves, because for years we all went ahead and focused on just getting the best API. But what I found is, even just in talking, working with traders, I'm sitting there for half an hour in a meeting and say, I'm going to go long, I'm going to go long, I'm going to go long, I'm going to buy the market. And then I do. And then somebody in the group's like, oh, I shorted. It's like, okay, people, this market is an open market. The same, I like technical analysis, and the same technical analysis, Edwards and McGee wrote about these things in the 1920s, and we're still using the same technology and technical analysis today. The point being with all that is that the market's an open market. People are going to buy at different times. They're going to manage their risk a little bit differently. So from the risk perspective, because there's great groups like TradeStation that they manage their risk extremely tightly and work with the regulators, which you understand, of course, on that side. I'm not worried about the risk side. I'm more interested in like what happens on the behavioral side. How do we go ahead and help people develop themselves better with different technologies and journaling and wealth tracker, which maybe we talk about in a few minutes.
Yeah, absolutely. Yeah, so I think that's really interesting. The part of what we do at OIC is we're constantly educating people as to how options work, right? And that's so much of this, I think. The technological piece of it obviously is, and James, when we started out, you were saying a lot of the things that I talk about sound crazy, right? And I can kind of attest to that. I've heard, we've been at conferences a lot over the last 2 to 3 years, and many times a lot of those things do sound crazy. And then all of a sudden it's like, 18 months later, here we are. And I think that the educational part of it that you're talking about, Rob, and how, giving people the tools to actually visualize that stuff and then be able to help teach themselves in some ways to be better, to manage the risk better, or to at least understand where those things are coming from is a really, I think it's a worthwhile endeavor, and it's going to build a much more kind of vital ecosystem along the way. James, I wanted to ask you something about the, you and I were backstage in the green room, and you showed me some of the UI that is starting to become kind of like a standard operating procedure for how you trade. And it's something that TradeStation actually, is offering. Can you tell us a little bit about this kind of instantaneous UI concept that we talked about?
So for anybody that's using TradeStation API today, if you want to connect to us, usually you're going to have the right to either rest or fix, and requires a degree of technical capabilities. Where the world is going that we see is that there's a lot more capabilities with ChatGPT and Claude, and people want to be able to interact with their portfolio and the market data. And so we've been trying to think about where does this ultimately go. We see maybe two pathways, and the way that AI is tending to go right now, there's one platform to rule them all, which is like the Claude, the ChatGPT, the Oracles. And in those workflows, what those companies are trying to do is to keep you in that one platform for everything about your life. And why is that important to your question? If you've got your productivity tools plugged in, if you've got your calendar, you've got your Zillows, it's got a lot of parts of your life, and it should be able to connect into your API for your brokerage firm. Now, Claude and ChatGPT cannot effectively communicate with the API on a consistent basis. So what do you insert in the middle is something called Model Context Protocol. It's MCP for short, and it is essentially an API for AI. So Claude talks to the MCP, talks to TradeStation API, gets all the data that's available, whether it's Greeks, positions, portfolio information, brings that back into Claude, and Claude is going to respond to the customer. So what I'm doing now, I'm using Claude almost exclusively. I've been a technical chart trader for 20 plus years. I've not looked at my stock charts since Friday. I am only using Claude to interact with the market, which is quite remarkable because I can get everything about my portfolio, everything about what happened overnight. I can get some coaching if I need to. It's gotten me out of trades. It's kept me in trades. It's actually broadened the capabilities that I have. So I'm using a lot more like put spreads, or so bear put spreads to trade the long side, short call spreads, things that I wasn't usually used to because it would find out based on my trading style what would be fitting in there. Now, to the disposable UI part, what's super interesting to us is we spend a lot of money. I think all of us spend a lot of money on building tools for customers to create a workflow. In Claude, I am creating these user interfaces that are usable for that exact moment, and then it's disposable. So we just looked at risk reward graphs. I said, what does my portfolio look like on the risk reward graphs? How am I exposed for the rest of the day? And boom, it gives me a UI, it's clickable, it's interactable, it is usable for that moment to demonstrate that concept, and then I move on. I no longer need to preserve that. So how does that change what I'm doing? So we just spent $12-15 million on a new trading platform. When I have Claude that spins them up, that is very interesting for us. Now, the other side of that is what we do inside of TradeStation, and this is something that's a little bit of a different pattern. So it's not the one platform to rule them all. This is more what you're going to find from Microsoft or Gemini, where it's in every one of your productivity tools, where you're going to have some form of an LLM that you can interact with. So we see that happening and being able to provide you with visualizations that we're not going to build ourselves. So maybe you want to see some type of unusual whale activity, unusual options activity, and you want to graph something that we're not going to build. You can do that through these LLMs to be able to create those instantaneous UIs for that moment in time. Where we're thinking longer term, that we're just going to provide you a container. You're going to converse with the LLM and you're going to create your own UI. So if you like to trade on charts, you'll be able to develop a chart workflow. If you like to trade just on depth of market, you can create that. You will no longer be beholden to what we build as a brokerage firm. You'll be able to really super customize your experience. If you just want one big buy button, we can do that. And you're not dependent on me to do that workflow. So we will own that container. We'll give you the tools to be able to customize those UIs. They could be temporary, like we're talking about, or they could be more permanent. That's sort of where we see it going.
Yeah, the buy everything button. That's so there's an interesting piece, I think, to this, and you and I were having that conversation backstage. Chris, how do you think, and we actually touched on it briefly before we came out, when you're starting to incorporate LLMs into this process and the kind of, let's call it agentic AI that exists there, and they are theoretically, I hesitate to use the word, but they're kind of making recommendations in some way, shape, or form. How do you guys think about that? Where are the recommendations coming from, and how should we think about that from a risk perspective?
Yeah, we've actually worked with the SEC on this already, where when we initially started, we're a registered investment advisor, but something to kind of keep in mind with what we're building is we are trying to build out like the next creator, the next financial advisor, where someone like you can go on TradeStation, build out that entire workflow, and then come to autopilot, launch that fund, and then anyone can come in and trade alongside you, and then you can make money from that via revenue subscription. So the reason why I bring that up is 2 years ago, an AI PhD from Morton came to us like, I want to launch an AI fund. And he wrote a book on how to have ChatGPT pick stocks for him. He went on autopilot, created the portfolio, and now I think he has 3 portfolios, a ChatGPT, a Grok, and a DeepSeek. And he's managing, well, technically, he has $100 million following his stock picks, his recommendations. Now, where the question comes in of like, who's doing the recommending? He is not registered. He has no kind of credentials. He's just a quote unquote creator that knows how to have AI pick stocks, and he's pretty good at it. We worked with the SEC on it, where they came to us and they were like, is it him doing the recommendations? Is it ChatGPT doing the recommendations? Do the people following know? Like, how does that entire thing work? And what we worked with them and came to the conclusion on was, he isn't necessarily doing the recommendations. He's writing the algorithm for it. The recommendations sort of are on the ChatGPT side more, because that's the stuff that's spitting it out. And then what we had to do is we had to write a white paper, and anyone that comes in and follows his picks, they get a email about the white paper. You can see it on the app, et cetera, et cetera. But it is something that I think the SEC is going to have to really kind of think through. It's because when you're doing that stuff, if you are monetizing it, if you're trying to talk about it on social media, does the credentials go to, or the certifications go to the language learning model or to the person writing the algorithm for the language learning model? I think it's going to be a big thing over the next few years, because more and more people can do it.
Yeah, it's interesting. And the comment I made to you backstage was, sometimes we don't even have transparency into how the LLMs are making the recommendations that they're making anyway. And now we're talking about that second layer that the SEC is going to want to talk about, which is, okay, if we're looking inside the model and then we're looking at how they're making recommendations in securities, right? Like, where is that coming from? It seems very opaque in many ways right now, and obviously the conversation we would have about this 3 years ago from a technological perspective would be different, but it would also be different from just, a government oversight perspective. We have a totally different landscape now. Rob, I want to kind of shift gears a little bit here and talk about how you guys, how does WealthCharts really think about that education piece and how you're helping people to make better decisions through things like journaling and, some of that education piece that's integrated into your platform?
Yeah, it's a real important piece, and I want to build upon what James said a little bit ago. Because what we're doing is we've launched it. It's live now, and a product called Wealth Tracker. It's inside of WealthCharts. What it does is it's a journaling. On the journaling side, it pulls in all your information automatically, so it's not like a third-party application where you got to go manually import it, because the more steps, more lazy, things just don't happen. So it automatically pulls in your trades. Then it goes and moves everything over into what's called Wealth Tracker. Now with Wealth Tracker is where it gets more interesting. To build upon what James was saying earlier, it goes ahead and takes all your trades and then starts to identify things with, like, are you revenge trading? Are you over trading? When's the best time of day for you? When are you not at your peak performance historically? So it looks at all these trends and models and gives you kind of a summation of where you're at. Now, from there, we took it to a whole new level then with Wealth Tracker Pro. What it does, it looks at like the top 50 most profitable traders on the platform. It's all anonymized, but the top 50 most profitable and the bottom 50 worst, the biggest losers. And then within that, it breaks down the top 3 of the 50 and the bottom 3 of the 50, and gives a whole bunch of information about what they're doing. How long are they holding trades? What instruments are they holding? It's all, again, very anonymized, but it gives you all this information. Then the algorithms, the AI, and that I try to watch all the terms. We are using LLMs and things in what we do, but a lot of people throw them around buzzwords AI because it's a hot thing. But people who are actually in it, doing it for real, like James and what we're doing, it's more of a real thing. And so what we do then is now it's going to say, hey, look, your average hold time is 3 hours and 20 minutes. The biggest winners on the platform, top 50 versus top 3, they're 10 minutes, let's say. You're going ahead and you've been constantly short for the last 2 days. The biggest winners are constantly long. You know, it just gives all this analysis of what you're doing, both for your own benefit, as in private journaling, your own analysis of what you're doing within yourself. Are you revenge trading? You take a loss and then you immediately jump into another trade right away. It looks for all these different things and reports it all back to you. And then what are you doing against what the most, isn't that what we all want to know? Don't we ask that question? I certainly did decades ago when I was first using TradeStation back in the 90s, you know, is like, what are the winners doing? What do I got to do to emulate the winners? Well, this kind of helps with that process, shows what the top people in the entire ecosystem are doing and how they're doing it compared to what you're doing. So we're trying to take, so James is going to take to a whole new future state. We're kind of this intermediary stopgap to get us to that next level. So it's really exciting how these platforms all, you know, kind of interconnect.
I think it's interesting though. So whether it's the helping the individual trader or monitoring what the professional is doing, what is capable now with the tools that are at hand to look at the data, find patterns that aren't there is phenomenal. And I think these gentlemen are going to have amazing businesses as they continue to build on that.
Yeah, agreed. I think that the interesting part, listening to you talk and Chris also, and James, right? Like there's so many kind of the similarities in different ways that this technology is enabling, right, for us to be able to do that. I mean, when I first started trading, I remember one of my best mentors said, essentially, trading is going to be an endeavor that will make you more truthful with yourself than any other job in the world. You have to get up and look in the mirror every day, and like that position that you had yesterday is still your position, and you're making the decision to keep it on today, whether or not you're like hitting the bid or lifting the offer to get out or whatever. And I think that's really interesting. I think some of the tools that you guys are building in is really fantastic in that way, especially from an educational perspective. I always see things through that lens. But okay, I want to kind of wrap up with a question for all three of you, and you can answer this in whatever way you want and in whatever order you want. But so we've talked about all of the things that the technology is enabling people to do. What is one thing that you think about when you survey this landscape that technology cannot replace, as far as maybe human judgment, or, you know, just, we've talked about all the things that the tech can do. What's one thing that the tech can't do? Chris, why don't you start?
Yeah. So with our platform, we get a lot of insights into this because I think we have around like 3.5 million downloads, and we've seen hundreds of thousands of people come through. A lot of people reach out to us asking about their retirements and their 401ks and their Roth IRAs. And something that we haven't seen be very popular is replacing that human touch of like a financial advisor, or at least some human being on the other side of the trades with us. The majority of our customers, our clients, they don't trade full time. They don't really care to think about it. They just don't want to do it on their own. But what we've seen is they're much kind of more open to following random people with their swing trade, their fund money, their Robinhoods. But when you get into their Schwabs and their Fidelities and their Roth IRAs, they want a human. And I think that this entire trend of like AI replacing a financial advisor, I don't think that that's ever going to happen. I think because as we go in society, trust is just going to become so more and more important. I see it on the social media side. Half the stuff we see is fake. Like, it's actually incredible. I don't even think people truly understand how much fake is out there. You won't be able to replace a financial advisor and the human touch of that. And I think that is something that you could double down on and build around. How do you create the tools for financial advisors to use AI to create a better experience and a better relationship with your end client?
You think that continues even as the next generation that is digitally native now inherits all the money that their parents have?
Yeah, and I think the market signal was Robinhood buying, I think it was Trade PMR.
Yeah.
This is their entire world, is this next generation, their whole wealth transfer. 80% of people fire their parents' financial advisors, but they bought Trade PMR and they kept the majority of the advisors on that. So I think that is an early signal of like, there still will be a human in this piece. No one just wants an AI blindly doing everything for them. They want to have that trust that someone is still on the other side of it.
Yeah. James, what do you think?
I tend to agree. I think even now, what we're seeing a lot is the assistance and improving your own capabilities, but I think it's really hard to fully automate through AI, at least where we are now. And I agree, there is a desire for a human to have some confidence, whether it's either from your tools or from another human that may be doing this more on a regular basis. I think we take for granted here, we live in this space. So we think about trading while we're dreaming. The vast majority of people don't, and they still rely on tools, they rely on bankers, they rely on experts to get their information. Now, they will be more informed and they'll have better questions because they can engage a little bit more in advance. But I do think when you look at the overall wallet share, there is that discretionary piece that you're willing to go and throw to the AI or whatever tool. But the big piece of your wealth, you're still going to want to have some, I believe you're still going to want to have some assistance in it, whether it's what do you do with your house? What do you do with your savings? What do you do with your long-term retirement? How do you balance all those out? How do you add insurance? Maybe we get there where there's enough help, but the overall whole wallet is going to be hard to fully automate.
What about you, Rob?
Well, from my perspective, first of all, I agree with both of the points already made. But in addition to that, I think for me, intuition, and I guess where I come from that is like, as you know, I've done like these trading competitions, these real money trading competitions around the world. And out of the 41, 42 I've competed in, I won, first place in 35 of them and second place in most of the others. Those are real money competitions. And I have gone up, because they allow it, I've gone up against these bots and these, algorithms and all these different things that people are creating. And, real world situation in Italy not too long ago where I went ahead and, this bot or this algorithm was just trading and trading. It was doing good. It was making some money. And they're like, Rob, still flat. It's like, because something didn't seem right. I was like looking for a pullback there. I had this intuition of about a pullback. Sure enough, the market just dropped. The algorithms weren't able to, and the AI wasn't able to catch up with it as quick as I was. I waited for it to drop. And then when it resumed, I jumped right in and had a huge amount of profits very quickly, and then superseded all the profits that the other AIs and bots and everything else, the algorithms that were actually being used had. So there's still intuition. And I think back to the whole, was it Gary Kasparov back in 1997, the IBM Deep Blue, that was like 28 years ago. And here we are. So the machine beat Gary in the chess match. But if the markets were just mathematical and it was that easy, mathematics, right? The PE ratio, what is it? The 15 is kind of considered a normal PE ratio. How often does our market go way past 50? If it was all about math and science and it's easily calculatable by a machine, the market would never go past the 15 PE, right? Where are we all at these days with a lot of these tech stocks? Way above that. So there's more to it. I think intuition still has a piece in this pie for the foreseeable future. So I think when to sum up your question, that's why I wanted to give the reason why, is that even 20 years ago, machines were beating humans in certain areas, but in the end, they're not taking over the markets, fully at this time. Why is it? I think intuition is one of those things that's not accounted for yet.
Yeah. Intuition is a really interesting answer to that question, right? Like as a trader, sometimes it's hard to put your finger on what makes someone great at doing something like that. I think that the artificial intelligence part of this is such a, it's such an enabler for in so many different ways. And I think you guys see how each one of these companies is doing it in their own kind of interesting way. But I also think that it's important for us to also keep in mind, right, and I know you guys are all on top of this because in so many ways you have to be, that the benefits and the risks are always important to talk about. And whether or not the regulators are on top of it right now, they might be more on top of it in 5 years than they are now, or maybe more interested in it then. But so I just want to thank all of you for taking the time today. I think this has been a really interesting discussion. So please put your hands together for the panelists. Thank you.
Thank you.
Thank you.